Good morning from London. I'm Anna Edwards alongside Guy Johnson and Kriti Gupta. We're an hour away from the opening trade. Here's what you need to know. The global bond sell-off continues as investors bet on a slower pace of US rate cuts. The dollar gains against all G10 peers. Bank of America chief Brian Moynihan urges the Fed not to go too hard on rate cuts in an exclusive interview with Bloomberg. Plus, Deutsche Bank seeks approval for further share buybacks as its investment bank unit reports a revenue beat.
In the meantime, a quick check on these markets. When you look at the equities picture, you're not getting much indication from the futures. Virtually unchanged, slight marginal underperformance in your stock 50 futures. If you're really going to look that deeply, to me, it's all about the bond market and the ripple effect in the currency market. Anna talked about that bond sell-off. You were seeing cable below that 130 handle, 129.93, and more weakness in the Japanese yen, 152.17 on dollar yen there. The countdown to the opening trade starts right now.
Wednesday morning, good morning. Despite all the action in the bond market, feels like kind of a bottom-up morning, doesn't it? We've got a lot of action in the single stock story. We've got a lot of earnings to work our way through. It's a bottom-up kind of a morning, and we're looking for the signal in the noise. So far, quite a few beats. Now we get Lloyd's.
Yeah, absolutely. Let's go to some of those building blocks then for this morning. And Lloyd's Banking Group is one of those. Looking at the third quarter, numbers better than expected. Will the guidance be enough, though? They see full-year net interest margin above 2.9%. The estimate was 2.95, so maybe that's enough. We'll see how the market responds. The reason this matters, of course, is that we were expecting flat net interest margin from this business, less vulnerable to the drop in rates. But the drop in rates broadly for the sector is not great. They've done well on the back of the rising interest rate environment. So that's why we're watching that one in particular.
Have you seen the front end of the UK curve? It's really interesting to see what's been happening with the yield story. Yields have been going back up again, not down. They dipped for a while. But despite actually the dovish commentary we've had from maybe Bailey over the last 24 hours, Green certainly sounding a little bit more hawkish. UK yields are reacting to what's happening in the United States.
Yeah,
it's interesting how the banking sector is being affected.
Transatlantic story coming across. Heineken numbers also, Kriti.
We should definitely talk about that. To me, the redhead crossing the terminal here is that beer volume only higher by 0.7%. The estimate was a whopping 2%. Now, Anna, before the show, they asked me what I wanted to drink. Maybe I should have said a beer.
It wasn't this.
It wasn't this.
I like your thinking.
We should point out at 7:02 in the morning. Yeah, Morgan Stanley saying going into these numbers that we've actually seen a soft beer environment. And so we were looking for any confirmation of that in the United States in particular. So we'll see whether the detail in the geography breaks that down. This stock is at a 4-year low. So you also wonder how much of that weakness in the beer environment is in the price. We will see. Possibly that one goes lower at the open, though, with that kind of miss on the organic volume. Yeah,
the regional story is interesting there because the weakness is coming from Europe, but the growth is coming from the Middle East and Africa. So it'll be interesting to see when we get a little bit more on how the market is interpreting that, given that more exposure to Europe. Anyway, let's talk about Deutsche Bank here because the numbers were in line from what we thought. I think the juiciest part was what we heard Oliver Crook interviewing the CFO over at Deutsche Bank, really saying that maybe they're having one eye on consolidation. It's not, of course, top of mind for them, but despite this kind of earnings, I want to say match. I wouldn't really call it a beat, earnings match. You are still seeing their buybacks. That's really where most of the action is.
The hint seems to be that they're going to be giving back more to investors.
Yeah.
That certainly seems to be the theme at the moment, which in some ways you could argue is in contrast to the comments on consolidation. Can you do both? I think would be a key question that I think a lot of people would be asking, and that's certainly kind of swirled around the UniCredit story with Commerzbank. I guess he's got to say that almost. If you ask me a question, kind of, is consolidation possible on a domestic level? I go, yeah, maybe, but not now. I'm basically kind of fending it off.
Yes, I do think it was interesting, though. The question was about Commerzbank, really, and yet he takes it back to Deutsche Bank. And I guess that's also the CEO's instinct, isn't it? And any leadership, a leader's instinct is to take it back to the business you know better. But the fact he was saying, yes, it all makes logical sense. It's just not the time for them to get involved.
Yeah.
You wonder where that leaves the German landscape.
Yeah.
Maybe in consolidation mode, but not with Deutsche Bank involved. Maybe that would be the takeaway from that. US earnings were fascinating yesterday. There were a number of different takeaways. We'll get into Starbucks in a moment, talk a little bit about Texas Instruments as well, what it's been saying. I want to start with the industrials. The industrials got absolutely mauled yesterday in the market. GE comes out with a really strong set of numbers. The problem with GE, and to a certain extent Lockheed Martin, which kind of fared in a similar way yesterday, is that these stocks have all risen really strongly this year. GE in particular has had a really great run. Yesterday, that came to a significant halt, as you can see. The stock down 9%. Lockheed Martin was down 6%. RTX got away with it to a certain extent, down by only 0.3%. But these stocks have had a really strong run. But the point, Critty, out of what we saw yesterday from the industrials was they're still struggling with the supply chain. What does that tell you? Here's the macro read. It tells you that goods inflation maybe hasn't gone away completely, and it's still part and parcel of the problem. They're still working with their way through this issue, which is something I think from a sort of macro signaling point of view is really useful.
Well, there's a ripple effect into some of those supply chain pieces, because originally when you think supply chains, you think commodities, raw materials, for example, but chips are such a big part of that equation.
Yep.
And you're already seeing that weakness show up in another American company as well. Texas Instruments was the one that caught my eye. 70% of their revenue comes from industrial equipment and vehicles. Aren't that the weak spots we've been talking about in Europe? To me, what was interesting is they're again talking about this idea that, yes, they have a good number for this quarter, but it's their guidance where you're seeing a little bit of weakness.
Yes, well, but actually the stock managed to claw back some of its earlier losses on those comments from the CEO, where, yes, the guidance in the numbers look weak, but the comments from the CEO managed to lift things, because he was saying it really is time for a rebound. We're not seeing it yet, but it really is time for a rebound, as if...
Not in the industrials, though. It wasn't in the industrials. It was other areas outside of the industrials where he saw the potential for that. The inventory work through is kind of nearly complete in some of these other areas, but the industrials remain weak.
Well, I think what's so crucial here, and the macro signal I'm taking away, is so many of these stories that we were talking about in Europe, this idea of China weakness, the supply chain issues, and we were kind of saying, well, the U.S. is a little bit kind of cushioned and kind of bulletproof from it. It's starting to seep into their earnings as well. Texas Instruments was one example. Starbucks was the other.
China.
I'm tempted to ask you what your Starbucks order is, but I feel like you might not have an answer for me.
I don't have one, basically.
No, the menu is too complicated.
The menu is too complicated.
Which is what this new CEO is saying.
Think about it. We'll save it for McDonald's later. No, it's perfect. It's just the amount of sugar we need. Anyways, this is an interesting one, because, again, they were talking about the China weakness as well.
L'Oreal as well.
L'Oreal as well.
Other companies talking about China weakness as well. This is a theme that already is beginning to stand out in terms of the earnings story. Lots to discuss. As we say, there's action in the bond market from a kind of top-down point of view, which we need to focus on, but there's this kind of bottom-up story that is emerging out of the earnings season, which I think is really fascinating. Sam Lynton-Brown, global head of macro strategy, BNP Paribas, is going to be joining us at 1:30 the hour. We're going to be talking to the Roche CEO, out with strong sales numbers this morning, but some key drugs are in phase 2, phase 3. We need to talk about what the outlook looks like. Eric Nelson, macro strategies at Wells Fargo, is going to be joining us at the market open 30 minutes later. Leslie McLeod-Miller, the CEO of Foreign Investors in Britain, is going to be joining us to talk about the non-Don story in advance of the budget and what is happening with inheritance tax and trusts and all that kind of stuff that you wonder whether or not the Chancellor is listening. We're going to find out very shortly.
It's a fascinating one, certainly something we're going to keep an eye on. Let's talk about what else we're going to be keeping an eye on. Plenty of data hitting the wire today, of course, over in the States. 3 p.m. UK time, those existing U.S. home sales are going to hit the wire. It's not usually tradable, but the big one, it's a precursor to the 7 p.m. data point that we get, which is, of course, the Fed's Beige Book. We should also take into account that we're getting comments, or expect to get comments, from Christine Lagarde and Andrew Bailey over in D.C. We heard just in the last 24 hours from Christine Lagarde. We'll talk about that throughout the rest of the show in terms of how she's viewing maybe the election and the risk of the tariff story. But anyway, central bank commentary out of Washington that's going to affect Europe top of mind. And then it's all a precursor to Boeing and Tesla earnings as well. There's a lot to digest there when we talk about what is coming up throughout the day.
Yep, absolutely. I'm really looking forward to the Boeing earnings. This time tomorrow, we'll have the results of the union strike ballot as well, which I think is going to be absolutely fascinating. In some ways, more significant, much more significant than the numbers we're going to get out of Kelly Ortberg a little bit later on. Let's talk about some of the other stories you need to know. The Israeli Defense Forces have confirmed that Hassan Safieddine, a likely successor to the assassinated Hezbollah chief Hassan Nasrallah, has been killed. This, as Lebanon's health ministry says, an Israeli strike near a hospital in Beirut killed 18 people. The U.S. Secretary of State, Antony Blinken, is in Israel. This is his 11th trip to the Middle East. He's pushing for a ceasefire in Lebanon and in Gaza. Bloomberg has learned that ARM is cancelling a license that allows Qualcomm to use its IP to design chips, escalating a legal dispute that threatens to disrupt global smartphones and PCs. The move ramps up a legal fight that began when ARM sued Qualcomm for a breach of contract and trademark infringement. That was back in 2022. The New York Times is reporting that Jamie Dimon privately told associates that he supports Vice President Kamala Harris and consider a role in her administration. The paper adds that Dimon will not express his support in public over fears of blowback, i.e. he's hedging his bets a little bit, I suspect. But maybe finally some indications that maybe he would serve.
It's much more typical in this part of the world, I feel, for business people to not at all get involved, as there seems to be more pressure on US corporate leaders to maybe have a say on this one. But another story on US politics that caught your eye, I know, Critty, and it seems to be making some transatlantic waves, is the fact that former President Trump is taking some legal action, new legal action, filing with the Federal Election Committee against the UK's Labour Party for what he says is election interference. The story goes on to say that it is entirely legal for foreign governments to meet with teams, for foreign nationals to take part in volunteering on the campaign trail and all of that. And we know, of course, that the backstory to this is that Trump was investigated as to whether he had coordinated his campaign with Russian interference back in 2016. The conclusion was that he hadn't, but still, that's the backstory, and that seems to be what's perhaps going through his mind. Not sure we want to link directly to the pictures of him working in McDonald's, but that is recently on the campaign.
Those are fries, not onions. Let's just make that out.
Let's just say,
well, let's come back to the cultural significance of McDonald's later in the show. This is fascinating that it's having.
What's your order at McDonald's?
Oh, well, so I have. This is a complicated one, but for the record, this is something that both Kamala Harris and Donald Trump are often asked on the campaign trail. It's a way to be relatable to the American audience.
In the UK, you ask, what's the price of milk?
Yep.
That is a pint of.
These are two very different threads in terms of politics. We should mention very quickly, though, that the reason that this is so important, this accusation of the Labour government as well, is that maybe the UK needs to take a page out of Jamie Dimon's book, and that if former President Trump is elected to power, does this then threaten a relationship with Keir Starmer or other members of the cabinet?
Keir Starmer's been very careful on that, and he's actually even met with Trump, hasn't he? I remember when he went to the United States quite recently, and he's been saying, we work with anybody, fully aware of the need to say that.
Sure, but then this headline crosses and it doesn't exactly portend well for the transatlantic relationship.
I'm sure under the hood there's no secret as to which side they would fall down on if they were forced to. Yes, we'll continue to watch that one. Really interesting story as to the way that develops. Coming up on the programme, ECB President Christine Lagarde says she sees a clear direction for rates, but the pace of cuts is still to be decided. More from that exclusive interview later this hour. Plus, L'Oreal posts disappointing sales as the beauty company suffers from worsening consumer demand in, you guessed it, in China. We'll look at that and the other stocks to watch ahead of the European Open. And it is a crucial day for Boeing. The troubled plane maker is due to report third-quarter earnings, while striking workers are set to vote on that tentative wage deal. All of that happening in the same day. That could bring an end to industrial action or not. We will preview Boeing's big day. If you have any questions, if you want to get involved in any of the conversations taking place around this desk, please do get in touch. IB plus BBTV Go. That is the function that you can use on the Bloomberg terminal. This is Bloomberg.
Gradually reduced interest rates are being transmitted, and our monetary policy is traveling to financing, to the activity, and ultimately to inflation. So it should encourage spending.
That was Christine Lagarde, ECB President, speaking exclusively to Bloomberg's Francine Lacroix. In another exclusive conversation, a Bloomberg exclusive, of course, Bank of America CEO Brian Moynihan is urging the Fed to be measured in rate cuts, warning against going too fast.
So we've got to get back in line. And so they're on that path. They were late to the game. They got to make sure they don't go too hard now. And that's what they are all trying to figure out watching the data.
Here for more, Bloomberg's Valerie Teitel, of course. Valerie, so we've got some thoughts there, or other people's views on what the Fed should do. What are Treasury markets telling us?
Well, look, the Treasury market is worried, kind of like how Brian Moynihan of Bank of America is worried about the Fed cutting too much. The Treasury market is showing some angst as well. We had the MOVE index hit its highest level of this year. That is the broad index that measures Treasury volatility across the curve. But I want to delve a bit deeper into that and see what is driving that, Anna. And I've pulled up the put-call skew on the 10-year note. Now, this shows whether investors are demanding upside protection on yields or downside protection line on yields. And you can see that we've now reached the most stretched level this year of investors hedging against upside risk to those Treasury yields. You can see it's been quite a regime shift from August. That was when we had that equity market wobble where investors were demanding protection against lower yields. It's been on a one-way track now. It is its most stretched this year, and it's its most stretched since September of last year. That is when the 10-year yields in the U.S. crossed 5% briefly in an intraday session. So there is some angst in the Treasury market. All those investors are looking to hedge higher yields, perhaps if we see a rise in the U.S. fiscal deficit, no matter who wins this election.
Valerie, thank you very much indeed, delving into what is happening within the move that we're seeing in bond markets right now. Joining us now to carry on the conversation, Sam Lynton-Brown, Head of Global Macro Strategy at BNP Paribas Markets 360. Good morning.
Good morning.
Sell treasuries, buy bonds?
That would be our view. The US data is very strong. We just heard that the market's quite concerned about a further sell-off reflected in prices. And it's not just the economy. There's also a political dynamic here, where the market's concerned ahead of the US election of persistently looser fiscal policy at a time when the Fed is also continuing QT. So the Treasury market, while the yield levels at first glance could look attractive, we wouldn't step in and buy at this level. In contrast, core rates in the Eurozone, in Germany, they're looking a bit more appealing here.
Buy the dollar if Trump wins, sell the dollar if Harris wins.
Pretty much. There may be some nuance on certain cases depending on which exchange rates, but Trump and the market's expectation that his win would lead to higher tariffs, we think is a major driver of a stronger dollar. So our view, certainly before the election for the next couple of weeks, is bullish dollars. We like being bullish against either the currencies that will be most sensitive to higher tariffs, like CNH, like HUF, and we also like being short currencies that are the most positioned, because what we're seeing ahead of the US election is really a de-risking. Any currency that the market previously was long, they're getting out of. And so that means a bearish view tactically, despite a positive bottom-up story, on South Africa, on the rand.
Sam, let me ask you about some other sort of election-related trades. Paul Tudor-Jones of hedge fund world, of course, saying that all roads lead to inflation, and he is talking about being long gold and long Bitcoin. Do you see all roads leading to inflation? They might be different under Trump and under Harris, but do you see that as a dynamic under the next presidency?
I think what we can say is, if Trump wins and he imposes tariffs to anywhere near the extent that's been suggested, that's inflationary. And we can say that if Congress is united, either with a red wave or blue sweep, that there'll be looser fiscal policy, and that's also going to be inflationary. So almost all of the different election scenarios that you come up with is likely to result in the market having to discount higher inflation than that had been the case previously. I'd add two dimensions to that political landscape as well. The first is the economy. In the US, data has been getting revised up quite materially. The weakness that the market thought they had seen, that the Fed thought they had seen in the employment data, wasn't really there. The other angle is geopolitics. Right now, the market isn't discounting much of a geopolitical risk premium into commodity prices. Oil maybe prices $5 to $6 after yesterday's rally of geopolitical risk premium. It's not a lot. That could go up quite materially if we were to see a significant escalation that also would be inflationary.
And give us a little more on where Guy started the conversation on treasuries and what we were hearing from Valerie about this big move in sentiment and the way people are positioned in treasuries just in the last couple of days or so. Does it make sense for this to be happening now? Because, I mean, the data's been looking resilient for a while. Is it therefore the polling? I mean, what's driving all of this revisit of how high yields go?
A 50 basis point sell-off in 10-year treasuries is certainly not what I think most people would have expected since the Fed has cut rates by 50 bips. I think what's happening is, while the economy on aggregate in the US has always been looking okay, there was a lot of concern that finally the labour market was going to deteriorate to the point that it would result in the Fed needing to accelerate its return to neutral, its normalisation of policy, perhaps even go below. And so what we've seen is that those revisions to the employment data has really prompted a very material shift in market pricing. I think that's the most important factor. The second component is then, as the US election gets nearer, as the market considers how inflationary either a united Congress or Trump and higher tariffs could be, it's pricing in a bit more risk associated with that as well.
Let's talk about that pricing. Give us the ceiling on yield for the 10-year. You said that the 50 basis points is not what's expected post-cut. How high can yields go?
I think it's very scenario dependent. I wouldn't really want to put a ceiling under a scenario, for example, of a red wave, because in that type of scenario where you have looser fiscal and you have tariffs leading to higher inflation, we've previously suggested you could have a sell-off in 10-year treasuries to the tune of 50 to 100 basis points more than our prior baseline. So that could take you to new highs in yields for this cycle. It's not necessarily the most likely outcome, but I think it would be unwise to step in and fade the sell-off too quickly in treasuries until we see some of the underlying drivers begin to change.
So you said 50 to 100 basis points. That puts 5% as a very possible scenario.
I think it is a possible scenario. It would require tariffs being implemented to the more extreme end of the spectrum. That's going to take some time, so at least several months after January.
Yeah.
And it would also require looser fiscal, and it would also require continued positive cyclical momentum.
So what is the bond market more likely to trade on? Yes, the election is part of it, but is it more likely to trade on in January pricing around the Fed or risk around the deficit?
I think the Fed. It's interesting. Right now, everyone's bearish on the Treasury market, bullish on dollars, and I think a lot of the time they say it's because of the election. If the last payrolls print had been 150k lower, I'm not sure that would be the case. So I think fundamentally this is a US cyclical repricing that we're seeing ongoing across break-evens, across Treasuries, across the dollar, and the election adds an additional asymmetry to that trade.
Where does the UK sit in all of this? Because the UK kind of is a bit of an anomaly for me at the moment. In theory, kind of goes with the European Central Bank, goes with the kind of the European picture, similar kind of economic strategies in some ways. But I look at what has happened over the last month in the 2 years kind of around the world. US 2-year up by 46 basis points. Most European bond markets haven't moved a great deal over the front, at the front, but the UK is up as well. How are you thinking about the UK? And is it more in the US camp or more in the European camp in terms of the way that we progress from here? Because the ground seems to be shifting a bit.
The market prices it being more in the US camp. We're not so sure. It's not fully in the European camp.
No.
Because in the UK, there's a labour supply issue where labour supply is still quite weak compared to demand. Therefore, the labour market's tight, therefore wages are high, therefore the Bank of England's concerned of cutting too quickly because of services inflation being at more elevated levels than would typically be consistent with its inflation target. We think that some of those factors over time will dissipate, so the Bank of England will be on a cutting cycle, but not to the degree that we think relative to neutral that you'll get to, for example, in Europe. So more Europe-like than the US.
All right, Sam Lynton-Brown, head of global macro strategy over at BNP Paribas Market 360. We thank you so much for joining us around the table. Let's go to some live pictures here. U.S. Secretary of State Antony Blinken is holding a press gaggle before he departs Tel Aviv. He will be en route to Riyadh. This is a crucial trip that he's going to be having simply because this may be a last-ditch effort under this administration to get that ceasefire deal. We know that, of course, one of the big pressure points is what retaliation actually looks like towards Iran. We haven't actually seen that happen yet in terms of outside of the proxies with against Hamas and against Hezbollah. So, of course, Antony Blinken really trying to get everyone on board and limit the effect on oil prices around the world. We'll bring you headlines as we get them. In the meantime, coming up on the program, Roche reports rising sales in the third quarter. We're going to talk to the CEO, Thomas Schinecker, on their new drugs portfolio, including a weight loss challenger that may be in the pipeline. Stick with us. This is Bloomberg.
Welcome back to the programme. This is the opening trade. We are half an hour away from that opening trade. Let's have a quick look at where futures put us right now in terms of the European story, mindful of the fact that US futures point a little lower, and the same here for the European markets as well. Let us move on to an earnings story that is in focus this morning. Roche has reported third quarter sales up 9%, beating analyst expectations. The Swiss pharma giant seeing a boost thanks to an eye drug as well as medicines for cancer, haemophilia and multiple sclerosis. Let's speak now to the CEO, Thomas Schinecker, who joins us this morning. Thomas, very nice to have you with us. So if we start with the big picture, I wonder, we're towards the end of 2024, looking out to 2025, what kind of confidence do you express about the year ahead?
Well, first, thank you for the invitation today. We had a fantastic third quarter, yet again, with 9% growth in the third quarter. This comes on the back of 9% growth in the second quarter. So we're very confident that we can carry this momentum towards the end of the year, but also into the next year. So very confident for our outlook.
So confident on the outlook, confident on momentum. Talking about the portfolio, and I know you came into this role, Thomas, with the intention of revisiting the portfolio. You've sold off, you've culled some of the assets that you had. You said on a call this morning with journalists that you consider the immediate portfolio revamp to be complete. So what are your portfolio plans from here? Are you still looking at potential candidates to buy?
Yeah, over the last 15 months, we've looked at the portfolio as a whole. And every individual potential medicine. And we've applied what we call the bar, so a way to assess every single molecule that's in our portfolio. And if it passes the bar, we kept it in the portfolio. If it didn't, we took it out. With that, we actually made room for some M&A, and we brought in a number of different potential medicines with first or best-in-class potential, like in obesity, like in inflammatory bowel disease, like in oncology and ophthalmology. And with that, we really shaped our pipeline to be really leading in the pharmaceutical industry. And we'll continue to do that. I think from now on, it's just a normal way to do our job.
Thomas, let's talk about two major clinical trials that are on the horizon here when it comes to your Parkinson's disease and Alzheimer's disease trials as well. They are expected to deliver results fairly soon. How optimistic are you that both of these trials, especially the latter, the Alzheimer's one, will actually get to where you want to get to?
I'm extremely optimistic on the Alzheimer trial. So here we have an antibody that is linked to another protein. This protein actually helps the antibody get into the brain, which is called brain shuttle. And this is important because, as we've seen with other medicines, including medicines that have been approved for Alzheimer's, is that they have a very hard time to get into the brain. In fact, less than 0.5% of the antibody that you inject into the body of this person will actually make it to the brain, and the distribution in the brain is not very homogeneous. Now, with this brain shuttle, we actually get it much more effectively into the brain. And we can tackle the same target, these plaques. And we see the results, and the results are amazing. The plaques get removed in a matter of weeks down to a level that we cannot detect them anymore, versus other medicines where it takes 6 months or longer, and you can still see some remaining part of that. So we believe very much in this data that we'll also present at CTAD at the end of this month. Now, on the Parkinson's side, I would say it's a trial with high potential, but it's also high risk. High risk, why? Because there has not been any medicine for Parkinson's for almost 50 years. And so, we are more in the dark in terms of mechanism of action, in terms of, is alpha-synuclein the right target, et cetera. But if it works, it would be huge because there is no other medicine in the pipeline for other companies. And, unfortunately, there has not been any improvement in terms of how we are treating this disease for such a long time.
Well, Thomas, let's go back to the Alzheimer's point that you made. Of course, this is a disease that Roche has tried to tackle for some time now. And this is a space where, unlike in Parkinson's, you do have a competitor globally. I think Biogen is the key one there. Walk us through then what your red line is in terms of pulling out. If the data doesn't come through the way that you expect it to, at what point are you going to say, this has gone too far?
Well, what we know from the Alzheimer trials that have been running, not only ours, but also the ones from these other companies, is that actually removing plaque has a clinical benefit. And the earlier you remove it, the bigger the clinical benefit. So we already know that this will work. And what we can measure with our antibody, which has this additional protein attached to it, which will help the antibody actually to get there where it needs to get to, is that we can see the plaque removal. So, I would say the likelihood is pretty high. Of course, there's no guarantee in life, but given that there is this link and this evidence, our confidence level is actually quite high here.
Morning, Thomas. It's Guy. Page 13 of your deck this morning talks about key growth drivers beyond 2025. And I think this is where the market is really struggling. On that deck, you've got the oncology that Critty's talking about. You've got the two neurology drugs that Critty's talking about as well, both in Parkinson's and in Alzheimer's. These are potential drugs that take you beyond 2025. But the market's not getting the kind of guidance maybe at once from you beyond that. What is the outlook beyond 2025? What does the market for Roche look like? What kind of numbers are you going to be posting post-2025 if these drugs on this page deliver for you?
Well, if you look at those medicines, we have, on the one hand, already launched some of them. Itofbi, so this medicine for breast cancer, which is a PI3 kinase inhibitor, so a cancer gene that's very well known and that actually appears in many other cancers as well. We have just launched this in the US and we're going to launch it in Europe. So some of this is already coming through. Yeah? And this is a medicine because it's so tolerable and the efficacy is so high that we believe this will take over the market leadership in this area. We have other medicines in there like divarasib, like Alzheimer's, like obesity, but also Gazyva lupus nephritis, which also came through. So we have a number of things that already happened. Yep. Now, what we know is that the current portfolio of medicines that we have, even without any future phase 3 readouts, would carry us to grow until 2027. And if some of these work, which we have very high chance of that happening, there will be no growth question around Roche. And if more of them work, and unfortunately in clinical trials you have to wait until the clinical trials read out, then I will see no concern at all, and we'll have significant growth. So we always, in pharma, we have to play with scenarios.
I understand that, and you've got to wait for the trials and you've got to wait for the data to come through. But do you think there is a growth question around Roche? And do you think that's why, in some ways, you could argue the stock has underperformed the sector a little bit this year?
Well, we've seen a significant pickup in our stock price over the last 6 months, and we'll see. I mean, if these phase 3 readouts are positive, then we'll continue to see a growth also in the share price. Now, I also believe, and that's what we've shown in one of the slides just a couple of weeks ago in London, is that as a lot of these medicines will transition into phase 3, they will actually add those into the models of the analysts, and with that you'll see more of positive sentiment towards our growth potential for the future.
Thomas, just to finish our conversation, we are only 2 weeks away from a US election. I wonder what's at stake for Roche, for the pharmaceutical sector, when you think about drug pricing, the state of the US market at this point.
Well, innovation will always be rewarded in whatever system there is. And that's why we are focusing on really transformative medicines. And we're focusing on diseases that create the highest societal burden and also the highest burden on healthcare systems, because we know that we need to support the systems to address these. And I think prevention is one good way to do that. Beyond that, what I can say is we've worked with all kinds of administrations in the past, and we'll continue to work with different administrations in the future. So let's see what comes out of the election.
All right. We will look forward to having that conversation once we know the result. Thomas Schinecker, CEO of Roche, we thank you so much for joining the program this morning. Let's turn our focus to another big corporate story out of the States that we're keeping an eye on. McDonald's has plunged in after-hours trading over in the States after an E. coli outbreak tied to its quarter pounders that sickened dozens of people and killed one. The company's U.S. president says the chain has acted swiftly by removing the burgers from its menu.
The decision to do this is not one we take lightly, and it was made in close consultation with the CDC. It's important to note that the majority of states and the majority of menu items are not affected. Other beef products at McDonald's, including the cheeseburger, hamburger, Big Mac, McDouble, and the double cheeseburger, are not impacted.
The U.S. president of McDonald's there talking then about the other options that are not impacted. Look, this is a crucial story. I think we joke a lot about McDonald's and, of course, in recent news, how it's affected kind of the commentary on the political trail ahead of the election as well. But this is a big piece of the kind of sales, not only for McDonald's and that they have to kind of revamp their supply chain as well, but also in terms of kind of building that consumer trust at a time when so many folks in the United States right now are turning away from some of these kind of fast food companies. this is a pretty big hit that you even saw reflected in its stock.
It was reflected in the stock, and you saw there the executive talking about the things that, in their view, it's still safe to eat, and the places it's still safe to eat them. But you have to think about the wider sort of chilling impact that it has just on visits to the place, or the ability to, the willingness to go and to buy food. And we think about Chipotle in 2015, we think about Wendy's some years ago. You know, there have been plenty of examples of where this has lived on in the sort of consumer psyche for a little while.
In some ways, though, you think about how many McDonald's meals are served every day around the world. It is stunning that this doesn't happen more often. I think you can maybe come at it from that point of view, that inevitably there will be an incident where there is some sort of contamination within the process. So you could argue that in some ways it is surprising that McDonald's is able, and other brands are able to deliver on this. But it will have an effect. How long that lasts, I think, depends on how quickly they get their arms around it and manage it. I would imagine, I would be stunned if it hadn't happened that McDonald's has scenario planned this many times in trying to get an understanding of how to deal with this kind of a situation.
And they've already talked about how they're going to go look at alternative supply chains for the onions. They are in absolute crisis mode. The reputational hit, though, we'll see how long that sticks. Coming up on the program, we're going to talk about some of the other consumer stories. Slowing Chinese demand continuing to hit European consumer goods in particular. L'Oreal is the latest to report a slump from that read-through. We're going to dive into that and your other stocks to watch next. This is Bloomberg.
Minutes the market open this morning. A lot of single stock stories that we need to focus on, but there is a macro theme that's running through these markets very clearly as well. The Fed is front and centre, as is the ECB. Christine Lagarde is the president, of course, of the European Central Bank, talking about the fact that inflation data has been reassuring, but that the Governing Council will not predetermine the exact pace of cuts. She, of course, spoke exclusively yesterday to Bloomberg's Francine Lacqua.
At the moment, we are not totally unhappy with what we see, because it looks very much that inflation is on the right track of disinflation. You know, we come from very high numbers, as high on average for the whole of the euro area as 10.6%. And the latest reading we had for the inflation in September was 1.7. So, you know, those numbers are relatively reassuring. They are only a number, and we're not looking at one data point, as I have said repeatedly. We're looking at a lot of data to make sure that this disinflationary process continues to be well on track. But, you know, we also have to be cautious, and you know, we cannot jump to conclusion that, okay, done deal, we've broken the neck of inflation. No. And I think caution leads us to look at all the data that are coming in, whichever form it takes, whether it's survey indicators, as we had a lot of that in September, or whether they are more model derivated as when we have projection exercises. And we will be looking at that and continue to be data dependent, but of course, cautious and not jumping to conclusions.
So when you look at inflation, could you achieve your target a little bit earlier than expected?
That would be my hope. You know, if our target is 2% medium term, and I'm absolutely confident that we will reach that target sustainably in the course of 2025. Is it going to be early in 2025? Is it going to be very late in 2025? I think it really will be determined by data, by the state of the economy, by energy prices, by the transmission. You know, we look at three components. We look essentially at inflation outlook, we look at underlying inflation, we look at transmission of our monetary policy. And on the basis of that sort of three pillar analysis, we can assess whether we are definitely on track and when.
Do you think it's a little bit sooner? I mean, so we, of course, at Bloomberg look at every single word.
Yeah, no, I know. So I'll be quiet now.
First quarter, second quarter, or is it just too soon to say?
I think it's too soon to say, because I wouldn't be loyal to our principle of data dependency if I was to tell you it's going to be on such time in the course of 25. I'm I think we all, governors of the Governing Council, and I'm sure you will be hearing lots of them in the next few days because they will be on air very much. I think we are all confident that 25 is the year when we reach our target.
Christine Lagarde talking about where rates are going. Down, it certainly seems, when it comes to the ECB. Different story maybe, beginning to be priced in for the Fed. Certainly that has been the narrative over the last few days. Who'd have thought that actually post a 50 basis point cut, you'd see a 50 basis point rise at the front end of the US curve. The dollar certainly has been a beneficiary of that. So where does the buck stop? Mark Cudmore joins us now, executive editor for Markets Live. How much further has the dollar got to go, Mark?
I think only a little bit further. I'm actually looking for the election to potentially mark around the peak of the dollar rally. I do not have massively high conviction in that view, but my theory is that we've been pricing in the dollar, the election being US dollar positive for a long period of time, and by the time we get there, it might be almost fully priced in the days after it. The reason I'm slightly worried about the conviction there is, as you know, Guy, I've been in the camp for a long period of time that rates still have much more to rise, that the number of rate cuts priced into the curve are completely bonkers, that the US economy does not look anywhere close to recession, and therefore, you know, the Fed should not be cutting rates aggressively. There's no sign yet that policy is overly restrictive for the economy just yet. So I do think there's still more upside in yields, and I think that we're probably going to get a lot more upside in long-end yields over the coming months post-election, whoever wins, but even more so in a Trump win, which I think then makes it more complicated about shorting the dollar. So I think the dollar rally is in its final legs. It may be too soon to suddenly turn bearish it.
Mark, we heard from Paul Tudor-Jones, hedge fund name, of course, and he's talking about gold and Bitcoin being popular. He says all roads are leading to inflation. I wonder your expectations around those assets.
Yeah, my only worry is, particularly around gold, is it's so consensus. It seems such clear. Like, for the last 8 months, it's been clear that, for all reasons, that ultimately gold has upside. But it worries me when it's just such a one-sided trade. Things are never that one-sided. So I'm worried about what risk we're underpricing out there for the gold rally. And maybe it's the fact that yields really do jump after the election. Maybe that's the risk we have. Maybe there is a much bigger dollar rally that I'm missing. But the only thing that kind of deters me about the gold trade is the fact that it seems so obvious and it's so consensus. This is not a surprise to be gold bullish. Everyone's gold bullish. Everyone's gold bullish for the exact same reasons. That's the worry there. I think Bitcoin is even more vulnerable to a little bit of a price correction post-election. Remember, everyone's getting increasingly bullish that the election will be crypto positive. They'll be fully priced in soon after the election. It needs another marginal buyer. There's constantly marginal supply. Who will be that marginal buyer straight after the election? I'm not sure.
What happens to Bitcoin or gold in a Harris presidency?
I think that, look, the sounds we've heard from the Harris camp over the last month or two is being supportive towards crypto. I think we probably have some profit taking. Bitcoin and crypto suffers in the short term, but I don't think that the Harris presidency is going to suddenly decide the fate of crypto. I think that will depend on your longer term view around crypto. I think that maybe gold also suffers a little bit, but being a little bit lower beta to that kind of outcome. So I guess they're similar trades. It is just that Bitcoin is a much higher beta outcome to the election.
All right. Bloomberg Markets Live executive editor Mark Cudmore joining us this morning. We can get more analysis from him and the team. Just type in MLIV GO on your Bloomberg terminal. Let's go from the macro to the micro and go to Joe Easton. Joe.
Morning, Critty. So L'Oreal's US ADRs fell around 4% last night following disappointing results from the consumer and cosmetics giant. And the main reason being there's a rapidly cooling sales outlook, according to analysts over at Jefferies today, who are warning that they are going to reduce their earnings expectations for the company, due mainly to weakness over in China and also some in the US as well. Now, we have already seen a bit of a drop in this stock already year to date, down around 19%, so potentially some of this priced in, but we might even see some weakness coming into peers like Beiersdorf, the owner of Nivea, and also Henkel, while Morgan Stanley adding in a note that the chemicals companies that supply into the makeup space, including Croda in London, could potentially be weaker following this update from L'Oreal this morning. So keep an eye on all of those stocks. Then in banking, the big headline is Deutsche Bank returning to share buybacks, announcing that it will do 675 million euros this year and predicting an annual growth rate of 50% in terms of those buybacks going forward as well. Now, this stock has outperformed recently, given the strength in the securities business or the trading business, outperforming the big US rivals like JP Morgan. We can see that outperformance on that stock there. We have also got numbers out today as well from Lloyds. That looks better than expected on impairments, and also some of the Swedish lenders as well. Finally, Rheinmetall, a surprise update from the UK government saying that they've signed a new defence pact with Germany, which will include Rheinmetall building a new artillery factory here in London. And now that is actually better than expected and a surprise, according to Morgan Stanley. That stock could potentially be on the rise this morning, continuing that outperformance that we can see on the screen for that one this morning.
Joe, thank you very much. Joe Easton with an update on your movers. In terms of other things we are watching, Reckitt Benckiser, we had an update from them this morning. A slightly weaker oil price and slightly weaker commodity prices, iron ore down 2% and copper. So that's what we're watching this morning. We'll keep an eye on anything related to those themes out of London and beyond. The futures picture looks a little weaker this morning. This is Buyback.
Wednesday morning, a couple of minutes to go until the start of equity trading here in Europe. I know, because I can see Credit's futures over there, that actually we are printed to go a little softer this morning. That's not coming out of this chart here. Basically, the white line's Europe, blue line's the trading session over in the United States, pretty much finishing in line. So there's not an obvious read across from what we got in the United States last night. It is a single stock story. Is that where maybe the catalyst comes from today in terms of the numbers we're seeing? Because I know, Credit, your futures are pointing south.
Fine, guys. Steal my thunder. It's fine. All good. Well, when you look at that softness, though, that you're talking about, a lot of it is concentrated in those French stocks. I'm curious how much of that is a reaction to maybe some of the earnings results that we got. Anna's going to cover that in a minute. You're seeing a lot of red on the screen. Remember, you do see a little bit of a weakness in the last couple of days as well. So this is really a little bit of a doomsday scenario for three trading sessions. Positivity, if you are looking for a spot, though, Anna, you don't look no further than Spain. The IBEX futures are higher among a sea of red.
OK, so that's the red nature of the futures picture for Europe this morning. A little bit of weakness expected. Let's have a look at some individual names and focus on where they might take us. Deutsche Bank will focus there perhaps on the buyback, the talk of another buyback, seeking authorization for that. Also talking about the role they want to play in M&A, even if the time is not right now. So we'll see where that takes us. L'Oreal also in focus, but this is a negative story. Sales hurt by a deepening demand slowdown in China. That's an ongoing theme for many consumer-facing businesses. The ADRs fell in New York. That dragged some of the wider sector lower, so we'll watch that for the European session as well. Reckitt Benckiser, of course, the maker of all kinds of household products, the consumer giant, reaffirming its revenue outlook and actually saying delivering a sales decline that might be better than expected for some people around some of its US baby formula news. Guy.
Let's talk about the opening trade. Here we go here in Europe this Wednesday morning. We are anticipating a soft-ish start to the morning, but you really want to dig below the surface and see what's happening at a sector level, what's happening at a single stock level, because key names are going to matter this morning. So London, a little softer. The IBEX, as Credit was mentioning, struggling in and out of positive and negative territory, trying to find some headway, trying to find a sense of direction. Struggling with that a little bit. We'll see how the DAX opens this morning with Deutsche Bank. The CAC 40, L'Oreal is going to be a big feature of that market as well. The Stock 600 down by just 0.1% at the moment. In some ways, if you park the earnings story to one side, it is a very macro market. It is what is happening in the States, the election story, what's happening with the Fed, what's going on, therefore, in the bond market, the dollar, that seems to be actually setting the tone at the moment. But the single story, stock story, bottom-up story, I think this morning is hugely significant. So, Credit, what's going on?
Well, you know, it's interesting. Ahead of the futures, you pointed out, I would say there may be some optimism out of Spain. Right out of the gate, some of your biggest kind of index contributors to the upside in the Stock 600 are indeed Spanish stocks. And when you look underneath the surface, it is coming from perhaps some questions around Spain considering a cut of the windfall tax. You know, this isn't something on large energy firms. This isn't usually something we talk about at the open, Anna, but it is enough to move the upside in terms of the stock 600. So that's one stock one sector we're keeping an eye on. The other is weakness in France, and that seems to be driving things to the downside.
Right, and you're right to point out that Spanish story, because utilities is the best performing sector this morning, and that is being led by Iberdrola and some other Spanish names in the mix there as well. The banking sector also doing pretty well, up by 0.3%. Of course, we've had news from the banking sector today. Lloyds Banking Group is one of the names in there, up by around 1.9%. We've also had numbers out of Deutsche Bank, we know, but that story is more negative. That one down by just shy of 2%. So something disappointing investors around the Deutsche Bank story. So a mixed picture on bank, but overall, the sector is going higher, perhaps responding to that overall higher interest rate environment, higher yield story. Maybe that keeps profits on net interest margin more positive for longer. Maybe that's the thinking. Once again, I think that was the trend yesterday as well.
Svenska Handelsbank doing very well this morning. Lloyd's doing okay this morning. So there are some names that are certainly lifting that sector. Lloyd's doing very well on the back of its numbers this morning. But Deutsche does look a little bit of a laggard, maybe.
Yeah, on the other side of that, L'Oreal taking a beating. Those French stocks now properly open, getting that proper volume at the opening trade, down a whopping 3%. You saw some of the other French names again. Airbus as well was taking a beating this morning as well. So again, you are seeing the underperformer in Europe right now, going right back to France. But Germany seems to be the outperformer.
It's interesting, the industrials maybe under a little bit of pressure. Big day yesterday for the industrials. You saw Lockheed Martin coming down. You certainly saw GE under significant pressure, but both stocks have had a great run. Today, it's all about Boeing. We're going to get the numbers out from Boeing very shortly, well, as the US opens up. And then as we work our way through the night into tomorrow, going to get this key union vote.
A lot going on in the U.S. corporate sector that may be feeding into the sentiment in Europe, as Guy was pointing out. Then there's the hangover of the U.S. election as well. We are 14 days away. Deutsche Bank CFO James von Moltke says he's expecting that U.S. strength once the election is out of the way. Take a listen to what he had to say.
We're off to a good start in the quarter, so that's encouraging. We think the conditions of the third quarter have carried through without the volatility, incidentally, that we saw in August. Usually, we see strength around a U.S. election, you know, as investors and also corporates need to position and react to changes in the markets and expectations. And so that's what we'll expect to see really once we get past the milestone on November 5th.
Let's bring in Wells Fargo macro strategist Eric Nelson joining us around the table this morning. Is the election going to be as much of a tradable event as we're expecting? We're expecting a lot of things to change if Donald Trump gets a second term, if Kamala Harris maybe status quo. Is this just one of those events where we kind of dread a little bit in terms of the trading narrative when it really will come back to the Federal Reserve?
It's certainly possible. I think also we have to keep in mind that we might not get a result for maybe even a few weeks. At the very least, a couple days is very reasonable to expect that. Look, in the U.S., the fundamentals are still pretty good economically. You know, corporate profitability is still high. Labor market is still chugging along. What strikes me is, though, this time sort of looking at Trump and the Trump trade is a little bit different, right? Back in 2016, no one expected a red wave, and it's exactly what we got. This time around, it's kind of the base case, right? And also, no one was talking about trade and tariff risk back then. This time around, it's a very real risk, and the numbers being floated are much larger. So I'm not sure it's an unequivocal positive for risk if Trump wins. And certainly the composition of Congress will matter in terms of the implications for fiscal policy.
So what does that do? It feels like those are competing factors then for the bond market here. If you're talking about that tariff risk in a Trump 2.0 or even in a Harris presidency as well, where she may carry on the tariffs that have stuck during the Biden administration as well, it feels like that's inflationary, especially in the context of a looming deficit and budget ceiling in January. But then could you see the Federal Reserve and other central banks around the world step in to reassure the markets, to reassure the bond market, and create more insurance cuts? Those feel like competing factors. What's going to win out?
Well, yeah, I think the challenge here is, you know, if you have tariffs and very expansionary fiscal policy, that sounds like a recipe, as you've pointed out, for inflation, and also maybe still relatively solid nominal growth. That sounds like a recipe for fewer Fed cuts, right? And then there's all sorts of talk around, you know, will Trump interfere with the Fed? There's not a lot he can really do. You know, to amend the Federal Reserve Act, you need 60 votes in the Senate. I don't think he has that. So, you know, are we sort of misjudging here the reaction function from the Fed? Will there be fewer cuts? Will that impact kind of the front end of the curve as well? I'm not sure this question is being asked enough.
Okay. So if we were to ask you what would be the answer, and Is it as simple as if Trump wins, you buy the dollar, if Harris wins, you sell the dollar, considering current positioning right now?
Well, I think you've already seen some of this trade come through, right? So I think you do see some, certainly if we have a delayed result, you see maybe some profit taking as people kind of wait for the final result. I do think that if Trump wins, you do see probably further dollar strength. It's mostly a trade and tariff story.
Yep.
As we look further out, we go back to 2019. Eventually, the trade and tariff issue became demand negative, and the Fed started to actually ease policy, right, as a result of these tariff announcements. So further out, we could see some two-way risk for the dollar, but I think the near-term reaction probably still is dollar strength.
In terms of kind of how you position on the curve and what you would see likely happening, just kind of how many scenarios, what do the tail risks look like right now around all of this? How fat are those tails? The uncertainty seems absolutely enormous at the moment. How do I hedge risk around this? Because we're basically facing an incredibly consequential but incredibly binary event that we may not get the result for a few days, but nevertheless the consequences over the next few years could be significant. How do I hedge that?
Well, I think you have to consider, in FX space, for example, we have certain trade risk that's very idiosyncratic, right? To me, Europe is an obvious target for the Trump administration. They've talked about this at length. We know Lighthizer, Trump's sort of trade czar.
The Europeans are going to respond.
Absolutely.
It could get really ugly really quickly.
Exactly. And this is why I think euro is a great place to look as kind of a short, as a hedge, if you do see that Trump victory. But also you need, looking at it versus the dollar is, to me, is a little bit too binary for sort of a, will Trump win, won't he win? I think you look at it versus, say, a Canadian dollar, where you have, exposure to possible Trump stimulus, but also sort of protection from the USMCA. I think really most of the U.S.'s issues in USMCA are focused on Mexico, not Canada. Yep. So I think there are some relative value plays in FX you can look at as hedges.
Eric, are there themes that you want to invest around that are sort of election-proof? I'm not sure if there's such a thing, but are there things that we are investing in right now, big structural shifts that are underway in the global economy, and you think that they will be sustained regardless of who is in the White House or the makeup of Washington?
Well, we talked to a lot of corporates in the U.S., and one thing that seems to be pretty much unequivocal is this, very gradual rotation away from China as part of the supply chain, right? We've seen consistent moves toward nearshoring in North America, also looking at India, other places in Southeast Asia. This has been, and I think that's kind of theme that is somewhat election-proof. Now, obviously, Harris and Trump are different in terms of the degree of their sort of sharp tone toward China. But to me, the general trend here in terms of bipartisan support, in terms of trade action toward China and moving away, that to me is election-proof.
OK, so again, we speak to CEOs who talk about a more regionalised supply chain. You might supply the US from Mexico or supply China within Asia. And I know that the pharmaceutical sector talking a little bit about that. This adding up to another inflationary impulse, do you think? Or do we manage to do it without it being inflationary?
Well, what's actually really interesting is that while there is clear coordination here from the U.S. and I think the general G7 away from the supply chains, China is doing its best to stay part of that narrative and also stay part of the global goods market, right? They're just actually doing their own domestic manufacturing now. So you see this really in EVs, but also in all sorts of other sectors. And that is a disinflationary impulse. So while I think there is the sort of reshoring narrative can be inflationary over time, China's doing its best to counteract that.
Great to see you. Thanks for stopping by to see us. Wells Fargo's macro strategist, Eric Nelson, joining us on what's happening in this market, top down. Let's talk about the bottom up. This is what the Core 6 looks like this morning. A whole bunch of numbers out that we need to factor into our thinking. But broadly, as you can see, a little bit of a risk-off kind of a day. Nova's soft, LVMH is soft, Ferrari's soft. ASML is bouncing a little bit this morning, but it's been badly beaten up recently. A little bit of defensive tone maybe coming in to Nestle, but I see Reckitt maybe doing a little bit better today. Maybe that's affecting that sector narrative. Maybe the numbers aren't quite as bad there, so maybe that's helping out as well. So in terms of what we're seeing this morning, hard to get a clear kind of steer. I think you probably want to look at some of the other single stocks that we're watching out.
Absolutely. So with that in mind, let's get to Joe Easton. He's got a briefing. Joe.
Deutsche Bank shares coming down around 4%, 4.5% at the open of trading. Now, analysts at RBC pointing to the higher than expected loan loss provisions at the German lender, saying that that is taking the sting out of those better than expected buyback predictions, so weighing on those shares in opening trading. Lloyds, meanwhile, in the UK, the loan loss provisions actually looking a bit better than expected for that one, and Handelsbanken in Sweden jumping following better than expected net interest income, something we've also seen from Swedbank today. So a mixed picture, but really Deutsche Bank the main mover on the downside. Deutsche Börse also as well has numbers out today. This is the German exchange operator seeing some weakness in their data business, according to that one. Another one to keep an eye on today. Then in terms of the other earnings we had a focus on, there's a lot in the consumer space today, particularly L'Oreal, which was declining at the open of trading as expected. It was down around 4%. I'm hoping that's going to come up. Well, first we go to the UK because we've got Reckitt Benckiser, and now the company announcing some stronger than expected staple goods sales. This is in the household product space, taking some of the weight from those concerns around US litigation, which continues around the infant formula business for that company. And WPP seeing the gains coming through from those new contracts in the US, which some of the big tech firms, including Google, was one of their big firms. So that boosting that one today. Then we will have a look at a couple of others. Firstly, Watches of Switzerland. Now, this one is away from earnings. It's actually an activist investor situation. Gatemore Capital overnight announcing they've taken a stake in the company and is pushing for a US listing of the UK company, potentially going to be the next firm leaving the London Stock Exchange if they do go along with those activist investor pressures, according to a statement. Here's those European earnings. We've got L'Oreal coming down 3% at the moment following that weakness in China. Heineken, meanwhile, better than expected sales in Asia, even as the US actually starts to weaken in terms of some of their profits there. Akzo Nobel, it's another profit warning from the maker of Dulux paint. Disappointing analysts. It's the third time they've cut guidance in the past year, and Roche holding up pretty steady following some pretty solid numbers from the pharmaceutical company over in Switzerland today. Just one morning call to bring you Porsche in the auto space. This one upgraded to buy over at Citi, that says the sell-off in the sector is potentially overdone for now, and they recommend actually buying Porsche once again, and that stock is rising 2.4% in Germany this morning.
Thank you, Joe. Joe Easton with an equities briefing for you. Coming up on the programme, we'll hear from our interview with Deutsche Bank CFO. Oliver Crook sat down with him and they talked about plans to restart the buyback and also about domestic M&A within Germany, within the banking sector. So we'll certainly talk about that. Our interview with James von Moltke, that's next. This is Bloomberg.
Deutsche Bank shares are kind of jumping around all over the place right now. Let's call it circa down 4%. This after the bank reported third quarter results that actually looked all right. Certainly trading looked good. Advisory looked pretty good. It's the provisioning where I think the problems may lie, certainly from a market perspective. CFO James von Moltke speaking to Bloomberg's Oliver Crook about the results. He was also talking about the domestic M&A story. Of course, we're focused on what is happening with Commerzbank right now.
We've been, I think, pretty consistent in saying the industrial logic for bank mergers makes sense, but that we needed time to be fully ready, and that time hasn't come. And so we're focused on executing our strategy, focused on delivering against promises we've made to our shareholders and stakeholders. And it's sometimes nice not to be distracted by other things and just execute, as I think the third quarter and the year to date showed that we've been focused on execution.
But then I guess, you know, if this were to go through with UniCredit and Commerzbank, it would make an entity larger than Deutsche Bank. We've obviously had consolidation in the Swiss market. We also have BBVA, Sabadell. So this is really a moment for European consolidation. I imagine that makes you sort of reflect on your position, not only within Germany, but within Europe. Where does Deutsche Bank want to, what space does it want to occupy in that landscape, in a landscape that is more consolidated with bigger banks? Well,
let me start by saying we intend to remain number one in Germany, and we think that consolidation here doesn't really change our competitive landscape. Germany is a very competitive market as it stands, and we compete against both Hypovereinsbank, that is UniCredit, and and Commerzbank in our home market. So that doesn't change much. But your point is one that we agree with. We think Deutsche Bank is positioned to play a leading role in European consolidation. We think that scale in banking, especially in the regulatory environment we live in today, is something that's important and something we observe, again, in competition with our U.S. competitors as a strength. So in time, absolutely, we see that. Taking place, and sometimes the first few transactions sort of set off a wave, and I think that's what you're getting at, and we certainly believe that begins.
How does Deutsche stay number one in Germany if that transaction goes through with Commerzbank and UniCredit? I think it's an interesting question. Anyway, of course, that's James von Moltke, the CFO of Deutsche, speaking to Ollie Crook just a few minutes ago. The shares are down pretty hard right now. 4.2%, 4.3% is kind of where we're trading at the moment. Why is the key question? Because broadly, when the numbers dropped on the screen, they look pretty good. I think it's the provisioning numbers that look like they're causing the concern. Ollie Crook's with us now. Ollie, walk us through the numbers and the market reaction and join the dots.
Yeah, that's right, Guy. I think you're right. Basically, you got the nail on the head there. What we saw in terms of provisioning is what is concerning the market right now. They sort of alluded to two large defaults within their sort of portfolio, and that, again, they have not given a lot of clarity on that. And given where we've seen on the provisioning going up, and we saw something similar in the last quarter, that is what seems to be spooking investors now, down almost 5% for what was otherwise, as you mentioned, Guy, a pretty solid quarter. You have FIC. Basically, now Deutsche Bank is the bank to beat on FIC, up 11%. That beat everybody else on Wall Street. Bank of America was the only one that came anywhere close. That was up 8%. Origination and advisory, M&A stuff, up 24%. And again, confirming that they will have a buyback in the beginning of next year because they got a little bit of that money back released from all the huge provisioning they did around Postbank. But I think it's interesting to see the market reaction there now, Guy. And also talking about being number one in Germany, maybe being a little bit too tethered to the German economy. If this is about defaults within some of their portfolio and you have issues in the German economy, is that going to be another concern for Deutsche Bank?
Yeah, so really interesting to see the way the shares are responding then, and the provisioning story that you highlight there, Ollie. Back to the comments that he had to make about consolidation. I mean, you asked him about Commerzbank and whether that sets off something of a wave. He did seem very enthusiastic that Deutsche Bank will play some part at some point.
Yeah, absolutely, Anna. So, I mean, this has really been the question because the focus for Deutsche Bank and Christian Sewing for the last couple of years has really been getting this turnaround on solid footing, and that seems to be kind of the mode that Deutsche Bank remains in right now with all of this consolidation. And obviously, Commerzbank brings it home, but we've had the consolidation of, the forced takeover of Credit Suisse by UBS. We have in Spain BBVA and Sabadell. All of these conversations. This is a different European landscape going forward. And in the past, when we've talked to Deutsche Bank about this, they said basically until there is a banking union, there is sort of limited upside to what you can do with these acquisitions. That being said, Andrea Orcel is very much going with the build it and they will come, build the bank and the union will come. And does that put pressure on Deutsche Bank in order to remain competitive in what is going to be a landscape with a lot larger banks? And it sounds as if they're not quite ready to sort of move from turnaround to a more aggressive phase, but that could happen beginning next year. They say they want to play an active role in European banking consolidation.
Oliver, thank you. Bloomberg's Oliver Crook there. And on a programming note, we'll be speaking with the German Finance Minister, Christian Lindner. That's at 2 p.m. UK time. Quickly, we should talk about L'Oreal.
Let's do it. One of the biggest German stories, too. One of the biggest French stories. L'Oreal shares falling after those sales missed estimates and a deepening demand slowdown in China. Let's get more from Bloomberg's Angelina Rascoway, who, of course, covers this story well. Angelina, what went wrong in these numbers? Is it just more of weakness in China?
Hi there, that's exactly it. I mean, basically the region that includes China and North Asia was down 6.5% when the markets were expecting it to be positive. So that was a big disappointment. Basically, there are continued worries about the macroeconomic picture in China, consumer confidence, the property market, and L'Oreal. I mean, basically, this was the 5th straight quarter of negative results there in China.
Angelina, is there a sense, though, from the company that with China's stimulus beginning to be announced by the government, that they will be a beneficiary of it?
I mean, they said they're hopeful. Obviously, it's probably too early to say because it was just announced the first initiatives last month, so it'll take time to trickle down. But basically, the company said, I mean, generally the luxury companies that they're not going to give up on China so easily. But they also had issues of their own making. There was also disappointment with their dermatological beauty unit, which includes brands such as CeraVe or La Roche-Posay. And Nicolas Hieronymus, the CEO of L'Oréal, he said that there were some issues, for instance, in CeraVe, worldwide. They probably had a lack of innovation. That's when they don't launch enough products. So it wasn't on top of consumers' minds, especially the Gen Z. And they also had a bad weather season. So that meant that people didn't, who would normally replenish on sunblock and sun care products, they didn't sell that much of those products. So that was a big disappointment as well in that unit, which normally was growing double digits.
And so is this something, Angelina, that should read across to others in the sector, others in the French luxury space, for example? L'Oréal, not always luxury, but are there read across or no?
I mean, we already got signs that beauty and cosmetics was struggling last week with the LVMH. I mean, the unit grew, but it failed to beat estimates. Tomorrow and the rest of the week, we're gonna get Kering results tonight, and tomorrow we're gonna get Hermes. Hermes, they have a beauty unit as well, but Hermes, their biggest division is leather goods and saddlery. So, but all in all, I mean, it follows relatively disappointing results from LVMH beauty unit, but also Coty. So L'Oréal is showing similar signs.
Certainly something we're going to be keeping a very close eye on, and not whether L'Oreal is kind of a canary in the coal mine for what we're expecting to see in some of the other earnings reports as well. Bloomberg's Angelina Rascoway joining us out of Paris to talk about that. We thank you so much. So we did Germany, we did France. Let's talk about Spain as well, because you are seeing some outperformance in some of the stocks there, specifically when it comes to energy stocks. And I think this is interesting. This is coming from a report from a Spanish newspaper, Expansion, talking about the Spanish government considering a reduction in the windfall taxes. This is something that the Spanish government has been trying to make permanent for some time now, at least according to the report. It's an idea here that maybe instead of keeping it permanent, they would instead impose that tax on operating income instead of revenue. This is something that's being talked about in Italy. This is something that's being talked about, of course, in Germany as well. This idea of whether or not windfall taxes are indeed effective to stem some of those deficits. Spanish stocks rallying off the back of it.
It's really interesting. I mean, it seems a little while since we've been talking about these real peak profits and peak energy prices for some of these businesses. If that's what we're harking back to here, maybe politics takes a little while to catch up.
It's going to be a story here in the UK. We're going to watch what happens with the banks. Certainly they look like they're in focus when it comes to the budget that is coming up. So that could be a story. I haven't actually read through the Lloyd's statement this morning. It'd be interesting to see if they talk about that within those numbers. But these kinds of taxes on industries is going to be something that it kind of feels like it's going to be with us for a while. The government bucket is empty. The corporate bucket is relatively full. How do you manage those
Lots
two?
of guests talk to us about that, don't they? They say, government balance sheet weak, corporate balance sheet strong. Therefore, there will be some flow.
We'll watch. We'll talk about that next as well. We're going to be focusing on what the other factors around the UK budget are a little bit later on in the programme. What else are we going to be talking about? The IMF boosting growth projections for the UK, but warning the new Labour government needs to keep its eye on that rising debt story. We're going to focus on that story again next. This is Bloomberg. Minutes into the opening trade, the numbers look a little bit like this. Not really going anywhere in a hurry. Maybe a little bit more positive than originally anticipated. It's a single stock kind of a day today. You've got a number of names that are having a disproportionate effect on various markets. Deutsche is certainly weighing on what is happening in Germany today. L'Oréal a factor for France. The energy stocks, a story in Spain this morning. UK banks are actually having a relatively good day, which takes me to our next subject. The IMF has lowered its global growth forecast for next year, warning of accelerating risks from wars, trade protectionism, etc., etc. The fund has, though, upgraded expectations for the UK, while cautioning that the new government needs to carefully manage its debt load. Anna Andrade from Bloomberg Economics joins us now. I'm never quite sure why we focus so much on the IMF, but that's kind of a subject for another day. What is it that the IMF likes, and is what the IMF is saying consistent with what you're seeing?
Hi, good morning. So what we got yesterday from the IMF, there's nothing particularly new in it. Essentially, the upgrade to the UK that the IMF did sort of reflects the good news that we've been having since the start of the year on the UK economy. We saw the UK economy growing by an average of 0.6% on the quarter, and that's sort of what leads this upgrade to the IMF now sees real GDP growing by 1% this year, 1.5% this year. That's broadly in line with what we're expecting. There's nothing particularly new. But I think the bigger question, and I think that's also where the IMF pointed in that direction, is what comes after that. Because right now we're seeing this sort of cyclical recovery driven by easing policy rates and also by a recovery in real income, so a recovery in consumption. But after that, and what that will determine the growth in the medium to long term are structural forces like productivity, employment and investment. And from that perspective, things aren't looking great, nor for the UK, nor for the rest of advanced economies.
In terms of the UK, can the Labour government at the end of the day manage their debt? I mean, I know we're all kind of waiting for that. Do you have any early indications?
Yeah, I mean, the IMF also focused on that because the problem with sort of these low growth prospects that you have both for the UK and for most advanced economies, euro area is included, is that in a context of high interest rates, then the only way to grow your debt to manage your debt is either to take tough decisions like spending cuts and tax hikes, or really grow your economy. And I think the Labour government is very aware that it wants that growth is part of the solution. It has aimed for growth of 2.5% in the long term. Now, that's very high. Our forecasts are more around the 1%. It seems overly ambitious, but that's the right direction to take. And I think this budget that we're going to get next week will be a first test, because on the investment front, at least, it will show us how willing Labour is to sort of put the money where it needs to go. And right now, one way to improve our long-term prospects is to boost investment.
OK, so growth and investment, one of the themes of the budget. Anna, thank you very much. Anna Andrade from Bloomberg Economics. Another will be fixing the public finances and how it does that, which sources of income it draws on. So the UK's super wealthy are warning that tax reforms proposed by the new Labour government could cause a, quote, second Brexit. One study commissioned by the lobby group Foreign Investors for Britain has found that proposed non-dom reforms may cost £1 billion a year instead of actually raising funds, which is what they would perhaps be designed to do. We're joined now by Leslie McLeod-Miller, CEO of Foreign Investors for Britain, who is hoping, of course, that the government is listening. Leslie, good morning to you. So set out what it is you think the Treasury, the government should do here, some sort of tiered tax regime. Exactly. Briefly explain what that means.
Well, so the Chancellor said that they would only make changes if they would make money and they were practical. And in March of this year, the OBR said that they had based research that would show that we would have a very small number of people leaving, up to 10%. So we conducted further research because the database was so thin. And the government recognised that. So we commissioned Oxford Economics to look at the whole non-dom regime here. And IHT, inheritance tax, was the red line. So preventing inheritance tax from being protected, as it has always been under the former government. And actually, we've had a non-dom regime in Britain since about 1799. So this is a major, major change. And what we say is that people will leave, and not just a number like 10%, but nearly 80% of non-doms would leave. And so rather than raising £3.6 billion for the Exchequer, we would lose up to £1 billion.
OK, so you're focused on the tax take that this will actually bring about. Yes. And I think we've actually heard from the Rachel Reeves team. They've said this is not ideological. We'll only do this if it raises money. But I'm sure there are many on the left who see this quite ideologically, and they look at IHT and they say, actually, that's a very redistributive tax. And if that's what you're trying to do, they make no apologies for that.
Yes, but you need to be practical. So, this is a highly mobile group of people, and they can be anywhere. They choose to be in Britain. And they said that they bring up their families here and they make investments. And this money goes straight back to things like frontline services. Many of these non-doms deal with a whole range of philanthropy as well. Yeah. And they contribute £9 billion of tax revenue to the Exchequer every year.
Does it seem conceptually strange, though, that you can be non-domiciled but live here?
No, I don't think it does, because if you come from a country where there's no inheritance tax, and you have generational wealth. Why would you expose your generational wealth just because you've chosen to be here? But not just be here as some tax dodge, to be here, contribute to society. And that's why we want to work with government in partnership to find a fair tax system which works for everyone and works for the ordinary taxpayer, because at the moment these non-doms are being courted by Italy, by Spain, and why would you?
Dubai, maybe.
Yes. Why would you want your money to go and for it not to be spent in this country?
Just to be clear, when we're talking about inheritance tax, we're talking about assets that are held outside the UK.
Yeah.
Okay. We talk about non-doms. This is a sort of colonial era phenomenon that has existed in the UK for a long time. We probably need something more modern.
We do, and
do we need to rename it? Do we need to restructure it? What would be the ideal outcome?
The whole word non-dom is pejorative anyway, isn't it? And it has connotations of tax dodging. And so we're saying that it does need to be fair. It needs to be a system of foreign investment, and recognising that people who are here are making a contribution but need to make a fair contribution. So we're saying...
Is the emphasis that, do you think these people are making a fair contribution now?
No, they're not. And they're also saying that they would like to pay more. And this is why they need to... We've had a meeting with Treasury where Treasury was able to speak directly with non-doms for the first time. And they're saying that they should have a system rather like Switzerland or Italy, where you have a tiered system based upon your wealth. So beginning, for example, at £200,000 as your base for those with assets up to £100 million, ranging up to £2 million for those with assets of
But this is a group that's not paying enough tax now, but could pay more in the future. What is the delta? What's the spread on that? How much more tax could potentially the UK government raise were it to put into
I think it's
action?
Almost the other way around. How much will they lose? We believe it's a large number, and we want to model that together with Treasury. But what we are saying is that if the proposals go ahead as they currently are, the government will lose. The British taxpayer will lose.
You made a key point earlier about the non-doms being courted by other parts of Europe as well, Italy, Spain, etc. But even within those domestic governments, they're also thinking about increasing the taxes to stem their own deficits. How long do you think that edge and that courting could last if the same problems exist elsewhere?
Well, we need a long-term solution, which is why we're looking at 15 years as a stable regime. And people stay here because Britain is stable, but the non-doms are here for a whole range of reasons. It's great for education. It's wonderful for culture, and they like to bring their children up here, and they do. But they want to invest back more. They want to work in partnership with this economy and make it grow. And if the current proposals go ahead as they are, everyone is now saying that this will be a loss. The Growth Commission last week said that we would lose $5 billion a year by 2030 and 0.5% of GDP also. Then we have the Adam Smith Institute that said we would lose £6.5 billion by 2035. So we're all saying the same thing.
And Leslie, has your argument and your proposals around the tiered tax regime and this period of no change for 15 years, are they being listened to? Are you getting a hearing?
We hope so. We have a meeting with number 10 tomorrow. But the alarm bells are here for everyone.
So you get the sense this isn't settled yet?
I certainly hope it isn't settled, because there are certain red lines. Inheritance tax is a red line for this highly mobile group of people. It's like the Concordia. If you hit the reef, you go down, and we can avoid that.
So finally, in terms of how you think this is going to play out, the budget's on the 30th. What happens after the budget if you are not listened to?
If we are not listened to, we will have to continue to lobby, because this government...
So you don't just pack your bags and leave? There won't be that kind of a story that develops post the budget?
Well, it would be tragic if that happened after decades of this regime being there. People have their children in school, and also it's not the right thing for the British population to allow this to happen. So we will continue to lobby.
OK. Leslie, nice to see you. Thanks for stopping by to see us, see how the meeting goes. Leslie McLeod-Mailer, CEO of Foreign Investors for Britain. Thank you very much indeed. Coming up, we're going to talk Tesla. The company is reporting later today. Investors eager to see more details on a potential cheaper car, as well as the recently unveiled cyber taxi. We'll have the latest on Tesla and the car sector next. This is Bloomberg.
AI will bring a tremendous opportunity for this industry. So that's the first thing we have said. So I said on the long term, AI is going to build up a real strong opportunity for the industry. Now on the short term, I think you're aware of that, not everyone is surfing yet on the AI wave.
Not everybody on that wave, apparently. ASML CEO Christophe Fouquet speaking there at the Bloomberg Tech event taking place in London and discussing the opportunities around AI. One business that has been looking into some of those opportunities, Tesla, is set to report third-quarter results after the US market closes today, with investors focused on the EV maker's automotive gross margin and forward guidance. For a preview, let's bring in Bloomberg's global automotive editor, Craig Tudell, who, of course, can help us go through some of this. So let's deal with all the things that are away from the robo-taxi or cyber thing. Let's deal with the numbers.
The here now.
Yes, the here now, and the things they've sold and the things they think they'll sell. What's the talk around that? Because these numbers are watched very carefully.
Yeah, I mean, I think this has become a bit of a harder, a more difficult company to cover if you're an analyst, in part because we've gone back actually to years ago that one of the knocks on Tesla was the only reason they're still in business is regulatory tax credits. We're not in that position anymore where that is, a factor in whether or not the company is sticking around. But this is actually something that's sort of reemerged as a major driver for their financial results because companies have struggled so much to spool up their EV sales. They're introducing more EVs than they did half a decade ago, but they're not selling them. And that is something that even Tesla is feeling in terms of a slowdown in growth for EVs, and it's very much industry-wide. So there was a bit better quarter this past 3 months in terms of demand for them. They had their first deliveries increase in a bit. But in terms of earnings, I think there's some real questions about whether or not they will actually be able to grow earnings because they may have grown sales on lower-priced EVs.
GM had a really good day yesterday.
Yeah.
Like amazing day. The stock was up kind of 8-9%. The commentary that comes out of it, we remain on track to reach our 24 EV production and profitability targets. We expect a $2 to $4 billion EV profitability tailwind in 2025. Is what GM is saying or said yesterday good news for Tesla? Should I think about this as something I should be factoring into my Tesla thinking as I go into the numbers? How do the two businesses compare?
I think it is. We've talked, year after year about, the competition is coming. The competition is coming for Tesla. And, for the most part, I think it was overestimated to what extent Tesla really was facing legitimate competition. I don't think that's necessarily the case anymore, where you do have some attractive-looking electric vehicles, whether it be out of GM, Hyundai and Kia in the U.S. are really gaining traction. So if you're Tesla, I think it's positive to see this EV trend take hold more broadly for the industry. I think they have very much actually done their bit actually to help with that in terms of in the U.S. Offering their charging network to more of the industry, but it does mean more competition for them in showrooms, and it's showing in terms of real slowdown in the U.S. market for them.
Let's talk a little bit more about that charging network. I'm a little confused about what happens to Tesla regardless of who's in the White House in 2025, simply because on the one hand, you have this massive investment in infrastructure and EV subsidies, which, of course, Tesla has profited off of. But then on the other hand, you have almost this pullback of those very pieces of support from in a Donald Trump era, who, by the way, has the support of Elon Musk. How are you interpreting these scenarios?
Yeah, it's really hard to square this idea of Elon Musk's support for Trump after all that Biden has done for EVs. And I think, is there some clear factors that come into play here in terms of Biden obviously is very pro-union. Musk has made his feelings about unions quite clear. He does not feel appreciated or even recognized by a Biden administration. And yet, Tesla is one of the biggest beneficiaries, not just of purchase tax credits, but manufacturing tax credits as well, given the batteries that they're manufacturing in the U.S. with Panasonic. And so they would potentially be hurt from the perspective of those tax credits, also from the perspective of support for charging infrastructure. And yet, maybe I guess Musk is sort of viewing this as a big opportunity in terms of maybe he's in the driver's seat in a government efficiency commission that does away with some of the regulators that keep an eye on Tesla.
Craig, thank you very much indeed. Our automotive editor, Craig Trudell. I want to take you to Russia, to the Brics summit, which is taking place in Kazan in Russia. President Xi Jinping of China arriving at that summit. You're looking at live pictures coming from that summit. A lot of eyes on what is happening here. A sense maybe that Vladimir Putin not as isolated as maybe we would think, certainly in the West. This is a well-attended summit, and this relationship between Russia and China critical.
Yeah, absolutely. 32 countries in attendance, a big gathering, one of the biggest they've managed to assemble on Russian soil since the invasion of Ukraine, of course. We had some really interesting analysis by Bloomberg yesterday about the new neutrals, so dividing the world up into Western bloc and then another bloc of Russia and China, and talking about the number of countries that are still in play when it comes to that sort of neutral positioning, and the Brics clearly going after some of that.
Europe really struggles with this one as well. This is a real issue for European industry. Let's turn back to what is happening on the industrial story. We just talked about what's happening with Tesla and GM. Let's talk about what Boeing's day looks like today. It has already signalled the company a big loss. We're going to get the numbers this morning. So this is the Q3 numbers that are going to come out. We've already had an indication that these are going to be bad. So investors and analysts are now looking to the new CEO, Kelly Ortberg, to lay out his strategy. This is his debut earnings call. The problem with that is that later on today, we've also got this union vote that is going to be determining whether the strike at Boeing continues or ends today. So let's talk to Benedict Campbell, who leads our global aviation coverage. Benny, how big a day is this for Boeing?
It's pretty huge, I would say. It's going to be 24 hours of fun. We will get, as you said, the numbers first. And more crucially than the numbers, we'll get Kelly Ortberg's first sort of strategy update. He will lay out how he sees the future for Boeing, how he got here, what needs to be fixed, and where the company goes from here. And arguably, as you said, we've had the numbers. That's going to be in focus. People want to sort of delve into his strategic vision, what he plans to do, and maybe also what he doesn't plan to do going forward. We got a bit of a taste of that a couple of weeks ago when they announced the job cuts. And there was a slightly veiled message in there that Boeing can't be everything to everyone. We need to think about where the core of Boeing lies, what we can do, and that might signal that the Boeing that we'll see in a couple of years will be a slimmer, a more focused company that has probably gotten out of some businesses. So we'll probably get the first contours of that today, and the messaging will be far more important than the numbers.
Yes, and how on earth do you get the messaging right, Benny, when you've got to put messaging into an earnings release for a start, and then you've got to talk to investors, and you still don't know, perhaps, some of the details of what you're really dealing with? I mean, how's that task going to be undertaken?
Well, that's going to be very difficult indeed, because he's delivering this with sort of one arm tied behind his back. We won't know until late in the day what the outcome is from the workers' vote, whether they will indeed ratify this latest tentative agreement that's out there. It's a 35% increase in wages. So we've come about 10 percentage points from the original offer, but a lot of people online still saying that's not enough, we need to see more, we want our pensions back. So there's still a lot of resentment and anger lingering from previous agreements that workers felt they were shortchanged. So we need 50% plus one to get this over the hump today, and it's anyone's guess whether they'll get there or not. If indeed, it would be a huge boost for Ortberg because it would really help sort of get one major stumbling block out of the way. If it fails yet again, they're back to kind of square one. They have to renegotiate. It'll seep arguably into the US election, so there'll be that political component, and we're looking for a longer recovery for the company yet.
Benny, is there a read-through to some of the other kind of big names in the space in terms of the industrial read-through. Guy and I were talking about that earlier on the show as well. But also in terms of Airbus, in terms of the way it trades, is there a ripple effect, or is this isolated to Boeing?
Well, you know, nothing that Boeing does is isolated to the company, because they are such a sort of central part of the industrial, of the aviation complex. Essentially, you have these two companies dominating this space. You have Airbus and Boeing, and Airbus have issues of their own. Let's not, you know, sugarcoat that, but they're not as pronounced as those facing Boeing. Airbus will have their earnings next week, so we'll get a little bit more of a read from them. But really, the big issue, and that's the ripple effect over to the customers, is they're not getting the planes that they want. Production at Boeing is pretty much at a standstill when it comes to the 737 and some other planes. The only one they're really producing is the 787 at the moment, but even that one in low numbers. And that's a huge issue for the plane maker, for the airlines. They're flying older kit. We're seeing airlines like Lufthansa being forced to cancel some routes because they have to fly them on old aircraft that are so inefficient that it's no longer viable. So you're seeing that real world effect on the space. You're seeing it with suppliers, Spirit furloughing employees, Senior in the UK also cutting jobs. So it's really, wherever you look, you have this ripple effect, and that really puts into stark focus the task ahead for Ortberg, the CEO.
All right, Bloomberg's Benedict Campbell leading our global aviation coverage with a pretty exciting, I'm sure, 24, 48 hours ahead of him. We, of course, will keep you apprised of all those developments. Another exclusive conversation to look forward to right here on Bloomberg Television is with LinkedIn CEO Ryan Roslansky. That coming up at midnight UK time. You can find that, of course, right here on Bloomberg Television, and certainly keep an eye on that. In the meantime, we do have some live pictures going back to the Brics summit over in Russia. We did just see moments ago Xi Jinping, the Chinese world leader, arriving. Now it looks like they are standing for that family photo, including the likes of Narendra Modi as well out of India, and I believe 32 other nations attending this morning.
BRICS membership has really expanded, with more states seeking to enter this grouping. So we'll continue to monitor headlines coming from that. We're also going to be monitoring a whole host of other things in the markets today, including some data out of the United States. Christine Lagarde speaking in Washington. We heard from her yesterday in our conversation Francine Lacroix was having. And we'll hear from Andrew Bailey. He's speaking in Washington. It seems higher R* was the message we got from Green. She was talking about how we settle at a rate of inflation that is higher than it was previously. Yeah, and we can expect, therefore, higher rates to be the narrative that spins off that as well. How dovish will Bailey be? Interesting in light of the fact that the Fed is taking a tougher tone. Does he reflect that as well? The UK is kind of caught in the middle at the moment. That is it for the opening trade. The Pulse is up next. The Stock 600 is pretty flat. So the FTSE 100 and the IBEX just keeping themselves in green territory, but everything else dropping just a touch. US futures pointing a little lower. Have a good day, everybody. This is Bloomberg.